Hi, everyone. Byron Patrick, the CEO of VERIFYiQ here. Happy holidays. Happy New Year. I'm recording a quick video to share with you because I want to tell you about a bunch of updates that we are going to be releasing over this holiday break. Three major updates. One is called solo review, the ability to have only a single person involved in the review process. Two, updates to the balance sheet and income statement comparison tool to reduce some of the false positives that exist right now on those comparison tabs. And three, a significant number of updates to the actual test rules and the flexibility you have to adjust those. So I'm excited to show those to you. I'm going to share my screen right now and we're going to take a look. All right, so here we are. So the first thing I want to show you is the solo review functionality. As mentioned, this is designed for situations where you don't want a two-step review process for a client. Maybe you're only using this to evaluate yourself and you don't need a second reviewer. So what we've done is created that ability within the client setup. So there's this checkbox, enable solo review. So again, what this will do when enabled is rather than the two-step process where you have a bookkeeper initiating the review and then a reviewer performing the review process, this will skip right to the review process. So only a single individual needs to be involved rather than trying to trick the system when there aren't two people involved. So we are really excited about this solo review option here, which will show up in the client settings. Don't worry, if you turn it on and then later on decide you want a two-step review, you can disable this setting and put it back to a normal two-step review. So that's number one. Number two is the test rules have been significantly changed. Previously, there were 14 levers or 14 settings that you could adjust in the test rules. I'm just going to zoom in right here. So there's this link here, test rules, on the right-hand side of the screen that you can click, and you can adjust the test rules on a per client basis. And as mentioned previously, there was only 14 actual levers that you could adjust. There are now 26. So we've almost doubled the amount of options you have to adjust. These rules are on a per client basis. So when you are adjusting these rules, you are adjusting just for that specific client so that you can really dial it in and make it useful. We've also expanded the descriptions within this test rules functionality. So for example, the client dashboard tab, even though there's no adjustments you can make, it's just describing what the rules are doing for you. Now, in the reconciliation tab, what we've done is we've expanded the ability to adjust how many days old the transactions, unreconciled transactions are, of whether or not it will be flagged as a warning or an error. And you can adjust these. Previously, this was hard coded. Now you could adjust it. If you want a warning to be 1 day and an error to be 15 days, you can make that adjustment. Also, a feature that a lot of people asked for was the ability to exclude a specific account. This might be a situation like maybe there's this Amazon credit card. It's not a card you use, you don't reconcile it, there's no transactions. You can exclude that from this test. So you can, again, eliminate some of those false positives that currently show up in the system. Large purchases. This tab was previously called General Ledger. We've renamed it to large purchases, which is more appropriate for what it is doing. And now you see you have two settings that you can adjust. Previously, there was only one number that you could set, but we had situations where clients were saying, hey, I'd like to put a lower threshold. Maybe those are transactions where I want receipts for those transactions, and then a higher threshold, which might be those capitalized expenditures. So you can adjust that to whatever you want. If you want to be 1,000 and 2,500, it could be 100 and 5,000, whatever is most appropriate for this client. You also have additional functionality to adjust what accounts are excluded from this search. For example, payroll, taxes. We'll actually pre-populate some of the common exclusions in this list. Insurance, you can go through here if you don't want, maybe there's a lot of advertising expenses that tend to be large. You don't want to see those get flagged. You can eliminate those. So you can go through and customize these on a per account basis. The inconsistency tab. The adjustment you have here is really just this ability to exclude certain vendors. You actually already had that functionality, but we've just improved the way in which that works. The income statement and the balance sheet review, we've done a lot to improve this. One, another request we've had is the ability to flag balances in parent accounts. So if you have a parent account with multiple sub accounts, many firms do not want a balance in the parent account. They only want balances in the sub accounts. So if that is something you want, you can turn this on. If you don't care about balances in the parent account, you can turn it off. You have that flexibility. Then you have the ability to adjust which accounts should have a negative balance. So, for example, on a profit and loss, you might have a returns or refunds income account that should have a negative balance. You can add that in as an account that should have a negative balance. That way, you're not getting that error message, even though it's supposed to have a negative balance. You can also increase or adjust the accounts that should only have a zero balance. So this is like uncategorized income or expenses, miscellaneous, suspense, clearing, ask my accountant. Basically, any account that you want to make sure you don't have a balance in that account at the end of the month, you can set that up here and make sure that it gets flagged if there is a balance in that account. The balance sheet, very similar. You can turn this switch on or off for the parent account and sub account balances. You can also adjust if there are specific accounts on the balance sheet that should have a negative balance. If they should have a negative balance, make sure they're listed here. Accumulated depreciation is a really obvious one. Select accounts that should have a zero balance. Again, undeposited funds, uncategorized assets, things that should have a zero balance. You can make sure to customize those. Accounts receivable and accounts payable, what we've done now is we've split this up so you have more control over each individual account, and then the thresholds for what is considered days overdue as a warning, what is considered days overdue as an error. For a smaller account or a high volume account, this might be 5 and 10. For somebody else, it might be 60 and 90. You can adjust it to what you need it to do. Finally, the comparisons. Now, I'm going to show you, once we go back to the settings, the update that we made to these comparison tabs. But the thing that we also did is you can now exclude certain accounts from this. And this was something that people asked for a lot. They were like, listen, there are certain expenses or certain revenue accounts that are going to have significant variability month after month. So if you're saying, look, our income is just always going to be all over the place, you can exclude that from this check. So you have the ability to customize that both for the income statement and the balance sheet comparison. And just to remind you, the way these settings work, so it will mark it as correct if within this specific dollar threshold. So you can really customize that on a per client basis. And then it will flag as a warning or error if there is a percentage difference month over month. And again, you can adjust this on a per client basis. So those materiality thresholds are going to be different depending on the client. And you can adjust those both for the income statement and the balance sheet comparison. The balance sheet comparison, you might actually say this is going to be 10 and 15, and this is going to be 5,000. So it's completely different. And again, maybe you want to exclude your bank accounts from this test on the balance sheet. You can do that. You might want to just select all balance sheet accounts. That it may not really be useful for you on a specific client. For some reason, you could do that. The final thing on here is the comparative periods. Generally, we default to 3 months. You can do it up to 12 months if you so desire. So save these test rules. When you do that, it's going to remind you that in order to apply the updated test rules, you need to run a rescan on the review screen. So, okay, it's going to save it. It's going to take us back out here to the review screen. You can hit rescan just for time purposes. I'm not going to do that. And then you can run through. So you'll notice the large purchases, what was previously general ledger is now here. You can see that. And this now gets me to the income statement and balance sheet comparison. So the update we made here, again, this is something that we got a lot of feedback on. Previously, if you had multiple months, it was actually running a trend analysis for all of the months. But the reality is, you already did the review for September. So you don't want to keep seeing September get flagged, October get flagged when you have done that work previously. So now, when you run a single month review, it is only going to check the balances for the current month of review. In this case, I did a November review, which is why it is only checking for November. If you do a multi-month review, had I selected September to November, it will then check all of the months that are part of that review. So again, just a way to really cut down on the amount of noise and really enable the ability for you to focus your eyeballs on the things that matter. So as I mentioned, we're really excited about all of these updates. We hope that they're updates that help you to be more productive in 2025. And we really look forward to hearing your feedback on how these have improved things for you, or if you have additional feedback for future updates, we always welcome that as well. Again, happy holidays. Thanks for spending a couple minutes to learn about these updates with us. And I look forward to seeing you in 2025. Happy New Year.